Hello everybody, doing Chfjpy here, DRFX Forex Swing Trading. Going to be taking another look at what's been happening in the currency market, specifically with the Swiss franc Japanese yen. Here we see that we actually have a strong bullish reversal candle that has now appeared almost out of nowhere. The last time we had taken a look at this pair, we had seen that it was in a downtrend and had broken these uptrend lines and was now headed in this direction. However, one of the things that I warned about was that these types of candles are somewhat weak, and they're generally characterized by slow movements that often lead to sharp reversals that take place out of nowhere. So 1 minute the market could be moving smoothly and slowly towards a target, and then out of nowhere the market produces a reversal candle that takes out the an entry that you might have taken along this trend. So this is what is taking place right now, and is one of the things that I'd warned about in the last video that I did on this pair. So it's not surprising that this is what is taking place. Many traders would probably be losing now and would be wondering why is it that that trend that seems to be headed towards this area here, having broken this uptrend line, all of a sudden we're seeing a strong reversal taking place. I don't know the reason, but what I do know is that generally speaking, throughout the market and through looking at currency patterns over the years across this market, these types of candles are notorious for producing these types of reversals. There are times when the market does move significantly towards its targets by several hundred pips, and they can be profitable. But there are an equal number of times in which you have these situations taking place here that can easily lead to losses. So my recommendation is generally to avoid this type of trading altogether. So this is something that traders will probably be hurting from and taking a loss, and no one likes to take a loss. So my best advice, if you are one of those traders in this situation, would just be to ignore this trade altogether, ignore this pair, and take a look at these examples of these patterns across other currencies, and you'll be able to see for yourself that these candles are very risky to trade. Those types of candles are what I call weak candles. They generally can appear to be strong at first glance, initially when you're seeing them, and they generally can tempt traders to get into a trade to take advantage of the expected movement. But as I said before, they are not as profitable, and there's too much risk associated with them. So this is why I tend to prefer to trade normal candles that are more profitable and are more associated with successful breakouts, whether breakouts from consolidation or normal trend movements in the market. So that is what I'm seeing. So that essentially is the explanation for what is taking place right now on this currency pair. So the best thing to do, ignore it, move on, and identify a setup and a trade that is going to allow for a more likely profitable situation and profitable trade for you. So until then, take care.